Hi there, welcome to Nepean Invest and welcome to the stock of the day. On the morning of December 2024, MedAdvisor, which have a medication management app, ticker MDR, released my favorite type of announcement, a trading update. Now, trading updates can come via or by different names. I've seen trading updates released as business updates, profit guidance. In fact, a company last night by the name of CTI Logistics released a trading update, and they titled that as simply profit guidance, profit upgrades, profit downgrades. You also see trading updates often released during companies' AGM because the financial year is about 4 months through, so they have a better idea how the company is performing. And a lot of times, the company will release a trading update when they release their half-year results. Not typically when they release their full year results because the financial year has just started. And of course, many companies release trading updates as standalone announcements, particularly if the company is performing better or worse than expected. Now, the reason my favorite type of announcement is a trading update is because they are so powerful when it comes to share price. Often you will see the share price rise or drop by a significant amount. And the reason a share price can rise or drop by a significant amount is simply because it can change market expectations. And we have seen that with MedAdvisor just today. They've released the trading update and it hasn't been perceived positively by the market. Share price down 20%. So they have titled this Trading Update and Investor Briefing. So obviously this was not positive. Obviously this would be considered a bit of a downgrade, particularly when it comes to market expectations. So what I'll do is I'll go through the trading update, have a quick glance at it, and then what I'm also going to do is have a look at this company's half-year revenue over the last 3 years. So the reason I'm doing that is because they mentioned in this trading update they do expect a skew of revenue to be towards the second half of the year, which is unusual for this company. And I'll talk about why that's unusual for this company when we have a look at FinChat and this company's half-year revenue, so first half and second half revenue over the past 3 years. We'll have a look at the chart at the end of the video. Okay, so let's have a look at this company's trading update. Why has it been received negatively by the market? Well, it's all because of the US business. So Australia business is doing fine. So this has US and Australia geographic businesses. And the reason why the US business is doing badly right now is because of the US flu season, in particular when it comes to vaccination rates. For some reason, vaccination rates have been lower than expected, which in itself is a concerning thing. But they do expect a deferral of vaccinations from the first half to the second half of the year. So they actually mention here, they expect to see a significant shift of revenue from the first half to the second half. They also talk about why. So, for instance, they said the second half pipeline for the US business is significantly stronger and more diverse than in prior years, with over 50% more brands compared to the same time last year. Given the robust second half pipeline and the impacts of the above deferrals, a substantial uplift in US revenue is expected in the second half financial year 25 compared to the prior year's second half results, which is surprising. So it seems like this company is now expecting second half revenue to be greater than the first half. Now, I actually should have mentioned this. First half revenue is expected to be down 25 to 30% from $75.5 million they recorded in the first half of financial year 24. So they would want to see a significant uplift in the second half revenue because of the significant decrease in the first half revenue from last year. Now, I think the market is a little bit skeptical they will be able to achieve this, and that's why the share price, or one of the reasons why the share price is down 20%. Okay, so let's have a look at FinChat, and let's have a look at the distribution of revenue in half yearly increments. So this goes back to 2018, but I'm just focusing on the last 3 years. And there's definitely been a skew in revenue. And I've always thought of this company as having this skew in revenue. Typically, the fourth quarter of their financial year tends to be the worst quarter. The first quarter of the financial year tends to be the second worst quarter. And the two middle quarters tend to be the company's best quarters. And typically, revenue is skewed to the first half of the year, not the second half. Yes, the first half. And this is proof. This is their revenue, half-yearly revenues over the past 3 years, and there's definitely been a skew to the first year. And typically, revenue drops a lot from the first half to the second half. So this could be a bit of a shift to how this company has performed. And I think that's another reason why the market is skeptical, because typically this company has a skew to the first half, and if revenue has dropped a lot, no matter what the company is saying, the management is saying, the market is now expecting financial year 25 for this company to be quite bad compared to financial year 24. Hence, the share price is down. Okay, so let's have a look at the chart. And it's not a positive looking chart. Now, in January last year, January 8, 2024, the company released a positive update. I'm assuming it's a positive update because the share price rallied 29% on that day. In fact, we can confirm that. Why not confirm it? The 8th of January? Yeah, the 8th of January. Let's go back 1 year, all the way to the beginning of January 8. No, they released a quarterly update on the 30th of January. I'm not seeing anything released on the 8th of January, which is interesting. There's nothing released on that. That's really interesting. Something must have happened on that day. Am I looking in the right year? Yeah, I'm looking in the right year. Anyway, that was sort of the breakout in the share price for MedAdvisor. Not massive volume coming in through on the day, but the share price rallied 29%, and the share price kept going up during the next 6 months. And a lot of times you will see, and I've mentioned this before, a lot of times you will see that when a company releases a positive trading update, you'll see the benefits in the share price for at least 6 months. And that's definitely what has happened to MedAdvisor from January through to July, because the share price did reach its high in July, almost 6 months after that breakout in the share price. And since the high in the share price has been in a downtrend. In fact, the share price has dropped from about 59 cents down to 21.5 cents. But the really interesting thing about where the share price is right now is if you go prior to that breakout last January, the share price was trading in a zone between about 17 and 24 cents. And right now, the share price is in the middle of that zone. So I would imagine there's a nice support area where the share price is right now. So if you are bullish about the long-term future of this company, now could be a good time to take a position or add to a position in MedAdvisor. Anyway, other than that, the share price or the chart looks pretty ugly right now. Okay, so that's all I've got for this stock of the day video. MedAdvisor, to go MDR, released a negative trading update. Share price down 20%. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.